We thought 195, so clearly an upside surprise, and it's actually difficult to poke holes in that report. So we would take it largely at face value. The only caveat being that month to month these numbers are noisy, but there wasn't anything that sort of jumped out that said there are big distortions here. So very strong payroll number. Household survey was more mixed. Obviously a big decline in the unemployment rate, but that was driven on the month by a drop in labor force participation.
There had been some people, high frequency, looked at Census Bureau hiring, said it could inflate it by 40K. You discount that?
I don't think that happened because federal government was up 12,000, and so that's the category where that would show up. And it's not really credible that you got a big decline somewhere else because there wasn't a big reason for it. So I don't think it was a major factor.
One tiny hole you could poke is manufacturing jobs have been slowing down. I think it was only 4,000 this month. We've seen that in previous months. We saw the ISM manufacturing number this month come in, I don't know, almost more than a 2-year low. What's going on there?
Look, there's no question that the manufacturing sector has slowed down, and you see that in a lot of different indicators. It came up in the FOMC press conference, of course, on Wednesday. And I think it's also reflected in the employment numbers. But I think the new information in the employment report was all pretty strong.
Do you think that's because of trade, that manufacturing is slowing down, or could that be a leading indicator of broader weakness?
No, I think there are a bunch of factors. I think trade, is certainly a factor. Chinese growth came down very sharply in 2018. I think that's been an important factor. Things have improved there, but it takes a little while before all of that feeds through into numbers in the US or in Europe. That's been one of the big discussions in markets. How long is it going to take until the Chinese improvement shows up elsewhere in the world?
The administration's unified in their belief that there should be a rate cut. You think there should?
Well, I don't see a reason for lower rates at the moment. I think it makes very good sense to be on hold at the moment. You've got a very strong economy, above trend growth, downward pressure on the unemployment rate. So I think that's an argument against cutting. But at the same time, the inflation numbers are well below target, at least if you focus on the ex-food and energy PCE measure, which is the primary focus. So I think you want to see how that shakes out before you make the next move. So probably nothing's going to happen on rates.
Is it transient?
I do think there are some factors in there, and Chair Powell enumerated them in the press conference that are transient. Apparel prices and
cell phones.
Yeah. And so I mean there are a couple obvious ones. Airfares. So that financial services. There are definitely some important temporary factors. And if you look at other measures of the underlying trend, such as the trimmed mean measure, which throws out outliers, that's actually basically running 2%. So at a minimum, I think you would want to wait before you said, we're really materially below target on a permanent basis.